Are you prepared for unexpected expenses? According to a shocking statistic, 63% of Americans are not. This reveals a larger issue that many of us tend to ignore: our lack of financial education. In today's world, knowing how to manage money isn't just helpful. It's crucial. But if you feel like you missed out on learning how to build wealth, don't worry, you're not alone. And the good news is, it's never too late to catch up. Let's start by addressing the elephant in the room: financial preparedness. The fact that most Americans can't handle a $500 emergency should serve as a wake-up call. It's not just about having some money in the bank. It's about being ready for life's unexpected curveballs. This is where an emergency fund becomes your first line of defense, a financial safety net. If you haven't established one yet, it's time to make it a priority. Start small, perhaps with $1 or zero, and gradually build up from there. This fund will give you peace of mind and serve as a buffer against the unexpected. Now let's lay the groundwork for wealth by understanding where your money is going. Budgeting and tracking your expenses may not sound glamorous, but they are essential building blocks for financial success. Once you have a clear picture of your finances, you can make smarter decisions. This knowledge allows you to cut unnecessary expenses, increase your savings, and embark on the journey of investing with confidence. However, before diving into investing, there's an obstacle to overcome: debt. High-interest debt, such as credit card balances, can be a significant drain on your resources. It's like trying to fill a bucket with water while it has holes. The sooner you plug those holes, the better. There are two popular strategies to help you achieve this: the avalanche method, where you tackle the debt with the highest interest rate first, or the snowball method, where you focus on paying off the smallest balances first. Select the strategy that works best for you and witness your debt shrink over time. Once your debt is under control, it's time to look to the future. One of the smartest moves you can make is investing in a Roth IRA. Why? Because it offers tax-free growth and tax-free withdrawals in retirement. This means that every dollar you invest can grow without Uncle Sam taking a cut. And here's the best part: the earlier you start, the more you benefit from the magical power of compound interest. It's like planting a tree. Start today, and in a few decades, you'll have a forest of financial security. So remember, even if you've missed out on financial education in the past, it's never too late to catch up. Start by creating an emergency fund, budgeting and tracking your expenses, tackling your debt, and investing in a Roth IRA. By taking these steps, you'll be on your way to building wealth and securing a brighter financial future. When it comes to ensuring the security of your investments, there is one key principle that stands out: diversification. Long-term financial success relies on spreading your investments across various asset classes, rather than putting all your money into one stock or type of asset. Imagine the consequences. If that particular investment were to fail, your entire financial future could be at risk. However, by diversifying your portfolio through investments in stocks, bonds, real estate, and more, you significantly reduce your exposure to risk and increase the likelihood of steady growth. History has proven time and time again that a well-diversified portfolio is one of the most effective ways to build and preserve wealth. Now let's address a common mistake that many investors make: trying to time the market. We are all familiar with the headlines about market crashes and booms. It can be tempting to jump in and out of investments in an attempt to capture the highs and avoid the lows. However, the truth is that a buy and hold strategy tends to be the most successful in the long run. Think of it like tending to a garden. You don't uproot your plants every time the weather changes. Instead, you let them grow and flourish. The same principle applies to your investments. By staying committed to them through the ups and downs, you are likely to reap the rewards over time. Lastly, let's not overlook the importance of online security, especially when it comes to our financial well-being. In today's digital world, safeguarding your personal information is just as crucial as protecting your financial assets. Given that so much of our financial management now happens online, it is essential to ensure the security of your data. A virtual private network, VPN, is a powerful tool that can help keep your information safe, particularly when using public Wi-Fi. Think of it as a lock on the door to your financial world. Without it, you are leaving yourself vulnerable to cyber threats To conclude, building wealth in 2024 is not about relying on luck or being born into privilege. It is about making informed decisions and adopting a strategic approach that sets you up for long-term success. By preparing for emergencies, managing debt, making wise investment choices, and securing your online presence, you can take control of your financial future. The steps are clear, and the strategies have been proven effective. There is no better time to start than now. So take that first step today, and together, let's build the wealth and security you deserve.